You're with us here on a new edition of Closing Bell. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. My colleague Surabhi will be with me here in the studios in just a bit. Mangalam is with us from the newsroom floor. Mangalam, hi. Good afternoon. You know, things are looking a little off and off color, I might add. Starting about 12:30 or so, the market started to look a little wobbly. We're off the highs, most definitely so. It's not a complete collapse or anything, but it's a significant cool-off. I think one has to say that the mid-caps and small-caps, I think, is where bulk of this cool-off has really taken place. Both indices were up about 0.8%, and they're absolutely flat now, but, you know, marginally in the green. That's about it. The India VIX, by the way, has surged some 5%. You know, the VIX hit all-time lows just a couple of days back, under 10, but it surged. It's come up to about 11.4 or so. And the VIX can occasionally sort of signal turns in the market. Too early to say that perhaps one is at hand, but, you know, from hitting all-time highs to a 5% single-day surge, be watchful. You know, I said this in the morning and we put out the data as well before markets open. The mid-cap and small-cap indices RSI, it's a very simple technical tool which tells you whether the markets are overbought or oversold. They were hovering above 80. I mean, actually, you know, still above 80, 86 and 84 respectively for the small cap and the mid cap indices. So we were, I mean, anything above 70 is considered overbought, and we were kind of looking a little overheated in the very near term. So perhaps that's a point to take on note. Nifty's Thursday low, last Thursday low is 18,669. As long as that is held, I think the higher top, higher bottom formation perhaps remains intact. For the Nifty Bank, the 40-day exponential moving average comes in at 43,443. This was the level which the Nifty Bank hit on Thursday and then bounced strongly from those levels. So those are the two levels, both in the Nifty and the Nifty Bank, one needs to keep an eye out on. Mangalam, on the F&O side of things, what are you picking up?
Well, a couple of things, Prashant. The first data point that we spoke about was the put-call ratio on the Nifty being 1.29. Every time the put-call ratio crosses 1.2, we see the markets getting a little overheated, and that's cooled off. So that's a big positive. Secondly, you know, I'll be watching out for the way we see some sort of unwinding in the 18,700 put. Over the last few trading sessions, it had gotten very easy to write, puts and then make money on them the next day because the markets were to go higher. Today, those guys have been caught on the wrong side, so maybe some unwinding is in place out there. Does that change the texture of things? Perhaps not. In index futures also on Friday, we saw the Nifty Bank outperform, but there wasn't enough money backing Nifty Bank futures. Instead, a lot of the money was brought into on the Nifty futures as well. So maybe, you know, that was a bit of a one-off, and this is something that I'll be tracking out for going forward. However, two places of concern for me. The first one will be, you know, where in the first half of monsoons in June has almost been a bit of a washout without rains. So let's see whether that comes about or not, because the second half of the monsoons, we're still going to see El Nino, and we are seeing the impact of that on a bunch of these FMCG stocks. So the FMCG index is at the low point of trade. And secondly, the mid-cap index, which was outperforming for most part of today's trading session, has taken a bit of a sharp knock from record highs. So let's see where that goes to.
All right, Mangalam, thanks very much for that. Let's welcome in. Actually, Surabhi is with me as well now. Surabhi, hi.
Yep.
Running into the studio.
Running in the studio, looking at a red screen. Yep.
We have a special guest with us here in our studios to take us through, really guide us in terms of what the market can do, but more importantly, how to approach things. Vijay Kedia is Managing Director at Kedia Securities. He needs no introduction whatsoever. He's an investor whose every move is tracked very closely. At last count, at least the ones that I counted, he's got investments in at least 15 companies with over 1% holding. Some of his favorite sort of big and most profitable picks have been names like Atul Auto, Serra Sanitary Ware, and we will discuss some of these in greater detail. He's with us here in our studios. Mr. Kedia, great to have you with us here, sir.
Thank you.
Thank you very much. It's always great to see you and a smiling face.
Yeah.
and what what better than having you here with us in person? So
yes,
glad you could make it.
Yeah.
We were hoping that we would be speaking to you with the Nifty at all-time highs, but not to be. So maybe another day.
It's okay.
But the mood is still at all-time highs, isn't it?
Exactly. So mood is all-time high. So if not today, it will happen tomorrow.
Aaj hai kal, whatever, right? I mean, ho jayega.
It doesn't matter.
How are you feeling about the market? I mean, are you feeling, at least especially on the mid and small caps, things are getting a little overheated? You were telling me that you have three ways of looking at the market, three phases, right? Three different phases.
Three phases of market. So sometimes you have to be active, sometimes you have to be selective, and sometimes you have to be inactive.
Right.
And don't forget that inactivity is also an activity.
Right.
You know. So so far I am concerned, I am not buying anything in this market. That does not mean that I am selling also anything. I am 100% invested, and this is what I had been doing for last 30 years. So it's okay. It doesn't matter to me whether market is at all-time high or not all-time high. It is happening today or it is happening after 5 days or happening next month. There are so many mid-caps which have gone up 4 times, 5 times, 10 times in last 2-3 years. So for them, it is all-time high. Already market is all-time high so far mid-caps are concerned. Selective mid-caps. Mid-caps are very large, 5,000 shares. You know. So but selective good mid-caps have really done wonder in this market. Forget about index whether it is all-time high or not.
So you are right now in the inactive active phase, like you mentioned.
Yeah, I'm 24/7 active. But so far, yes. But so far, buying is concerned, I don't have money also, and I would prefer to whatever, as you say, whatever seeds you have sown. You know, not necessary every time you have to. You know, sometime it is you have to just watch your plant, watch your plant grow. So I'm in that phase now. I'm invested and just watching what is happening. All-time high just give a momentum in the market. People become, very happy or thing, and then stock price also overshoot or, as they say, overvalued. So this is what that is happening in this market, but that is part and parcel. That does not mean that you should sell and go.
But it's not some blow off top or anything, right? I mean, fundamentals have been looking good. Earnings pickup has been very good. So in that sense, this is justified, and one can justify it based on fundamentals, what's happening?
Whatever investment I have made, Prashant, I am comfortable in all those stocks. Most of all the stocks, I am comfortable. I don't feel that they have overshot or something, or I should sell or not. As on today, while I am speaking to you, at this moment I am thinking I may change my mind. But I am comfortable in this market. But there may be some euphoria is happening in this market. But what we have seen in the past, every time this euphoria happens, so that is a part and parcel of this bull market. So that you have to take in your stride.
You put out a tweet some days back mentioning a company which had tied up with
Tesla.
Yeah. But not Elon Musk's Tesla.
Just imagine, the stock price went, I think, doubled of 60-70% gone up.
Yeah.
Then I realized, oh my God, what is happening? Then I tweeted, why is it not that Tesla of Elon Musk? So be careful. Yeah. The stock price went down 30-40%.
Correct.
So that people should be, should always be aware and afraid of all this kind of, things. Otherwise, they will lose their shirt, and later on they will repent, and then they will say the stock market juए का अड्डा है और ये हो गया और वो मर गया. There is a code of mind, Prashant. There are 4 caps. There is large cap, mid cap, small caps, and there is another cap which is Bangar cap. And 4,000 shares come into that category, right. Bangar cap category.
Right.
So all these shares will perform, and there is a euphoria, there is a bull market, and there is euphoria in the market, and then they will die down. So one should be careful.
So I don't know, Mr. Kedia, whether you can give us some more color on some of your picks that people always look out for and sort of get. Like, for instance, a stock like Tejas, I don't know if you still own it or not, up 60-70%. Then I think there's a precision camshaft. So you're known to pick these stocks and then really back them all the way like you're describing right now. So give us a sense in terms of maybe a theme, though a lot of it is bottom up. But when you look at your portfolio, what part of it are you most optimistic on, despite whatever the market is doing?
No, it is very difficult for me to elaborate that where I'm very more optimistic. It is like your child, your children. You have so many children.
They're all equal.
And I will tell you one thing. I sometimes feel that my love towards all my shares is like maid, not like a mother. Like the maid which comes to our house. So what a maid does, वो जिसके भी घर में जाती है उसके बच्चे को अपना बच्चा समझती है. And the moment she leaves the job, she forgets about the child and she goes to another house and she gives the same love to another child. So for me, it is like a maid and everything is same, So it would be difficult to, maybe today, suppose some stock is doing well, I can say this is my favorite stock. But that would be a lie. I'm liking them, that is why I'm holding. So I usually try to catch or try to enter into a sector where, in a turnaround sector, where the sun has started rising. As you named Tejas, I'm still holding around some 2% or something, I'm holding Tejas. So I bought when I found, I waited and I watched the stock for 3-4 years. And when I found now that it is at an inflection point and the sector is going to turn around, then I entered the stock. So this is what the theme I am applying. It could be any sector. That is no limitation, no restriction that I don't invest in this, I don't invest in that. My job is to just watch what is happening in the economy or in the country.
Let's use Cera Sanitary Ware as an example, right? Tell us this. I mean, it's you think you bought it in 2003?
2005-6.
2005-6.
Yeah.
And that has been it's been a what?
Yeah, so.
How many X?
How many X? 16,000 times. Initially I bought at 60 rupees. Okay, and 2005 and 6, 60 rupees. And in 60 rupee shares till 2023, till December or say 2023 March, I got some 250 rupees as dividend. Okay, so you have got 4 times as a dividend money that your FD ka everything is covered. And so if I minus the dividend from 60 rupees, so my cost is 0. So if I calculate that even my cost is 1 rupee, now stock price is 8,000 rupees. It is after 1-to-1 bonus. So it is 16,000 rupees. So the stock has given us 16,000 times return in a mere 17-18 years. So this is the magic of compounding, and this is the reward of your patience. And don't forget that I've seen a COVID-like situation in March 20. And I've seen Lehman Brothers crisis also. You know, the stock 4,000, and every time whenever this bull market ended, in every bear market, the stock price went down by 50% to 70%. And I held on to that. I saw that kind of, erosion in your wealth or erosion in your portfolio. Even in COVID, June 20, stock price was some 1,900 or 2,000 rupees. And in merely 3 years, it is now back to 8,000 rupees, not back to all-time, lifetime high. 8,000 rupees.
But are you still as convinced about the home building theme? I mean, you still want to hold on to Cera? Or do you think that given the extent of the rally, you perhaps feel that we're somewhere close to sort of,
No, I think theme is intact.
Okay.
So far, economy will be rising, keep on rising. So far, boom in real estate will be there. So far, aspiration of having a home will be there. Whether you own the home or you rent the home, ultimately home has to be there, So as long as population is rising and economy is rising, I think this demand for housing and demand for all this, their building material things will keep on continue to rise. But I am selling, I've sold now my last lot, whatever. Now I am selling, I have sold. After 16,000 times I've written my last lot, because I want to keep my mind active so that I can find some another
the next
story.
Big multi-bagger.
So the lesson from the Cera story is what? That stay invested.
Stay invested forever. 24 into 7 into 365. If you find a theme, if you like a theme, and if you think that company is doing well as well as the sector is doing well, then don't tinker, then don't play with the stock. Think like a farmer. I don't sell my stocks in a bear market. Like a farmer does not sell its land in a drought to buy back in the spring. Okay, so same way, I'm not selling my shares in a bear market so that I will buy back in a bull market. On the contrary, I don't sell my land in the spring also to buy back in the drought, because I'm not so smart. I don't know whether I would able to get that kind of quantity which I am holding, that percentage will I be able to, that particular shares will fall or not fall. So I don't want to, become so smart in this market. I want to, remain a fool that stay invested at any cost.
So, I just want to ask you whether this is something, this principle of getting in ahead of the curve and then staying invested, whether you're willing to apply that to the defense side of the market. We've been doing, of course, a lot of the research today. These stocks are up. Anyway, I was looking at it. So when you see a stock like, let's say, Mazgaon Dock, up 400% in 1 year, psychologically, one starts wondering if this is getting too overheated. But market cycles also tell you that things can go up, just keep going higher if you're backing the right theme. So what's your view on defense? Does it make the cut for you?
So I don't hold any defense stock as of now. I had bought some shares, but I exited, unfortunately, long back. Of course, I made some profit, but that is not the idea. Idea is to ride the
whole wave.
But I think, suppose if I had Hindustan Aeronautics or even Mazda, I would not sell my shares, because I don't sell it so easily. Maybe stocks are overheated. There is a euphoria in this defense stock. But I think ultimately that euphoria will remain there. At 700 rupees, Mazgaon was also a euphoria. In 2,800 rupees when HAL was last month, that time also it was a euphoria. Now it is 3,900, 4,000 rupees. So this will continue. This is the structure of this market. This is the mood of this market. Market will always prove you wrong. Downside also, upside also. When market falls, then also you think, no, this is the cheapest price, this is the bottom, this is the bottom. But market mind is different. Same thing is happening in the reverse side also.
Mr. Kedia, stay with us. We have to take a quick commercial break, and we'll do that. We'll come back and continue this discussion with Vijay Kedia on the other side. Stay tuned. Okay, welcome back. We're in conversation with Vijay Kedia, Managing Director, Kedia Securities. Mr. Kedia, let's just talk about another area which you're very bullish on, infrastructure, capex. And in this segment, you have investments in names like Patel Engineering, which you bought recently, but the stock has already done very well after you bought it. Elecon Engineering is another pick of yours. Talk to us about this space. Are we starting a new boom in this space after many years?
I think so. Maybe I am biased, and but I think so that in another sunrise sector, there is a quote of mine that stay in a sunrise sector at any cost, stay out of a sunset industry at any cost. So I think this capex and infrastructure is a sunrise sector currently, for the simple matter that whatever infrastructure spending is happening in the country or happened in the last 5-6 years done by government only. Now private sector investment is also started coming up. So I think the beginning of the bull market for all these companies, all these sectors has begun. And the last boom in infra and capex had come between 2003 and 2007. And if you remember, stock price had gone up 10 times, 20 times, 40 times, all those companies. And after that, hundreds of companies have died down because of all this scam or bank scam. And most of the banks, NPA, happened between
Because of the
2008 and 20 because of only this infrastructure and steel sector and because of the credit to them. So now I think banks have also become cautious, and now the people have also learned, government has also learned a lesson. And now there are very few companies who can really execute some project worth 3,000 crores, 4,000, 5,000 crores. So whatever companies has been left out in this sector should do well. So, and once this private capex starts happening, so it will directly contribute or directly help companies like Elecon Engineering and all, which are into gear manufacturing. So thinking that all those things in my mind, I bought Elecon Engineering 2 years back, and Patel Engineering I bought just 2 months back, but it's already gone up. So it's not at all a recommendation, just a discussion, because people should do their homework, and there are so many ifs and buts, you know.
Mr. Kedia, I've heard the conversation that you guys were having, and at the same time I was reading all, your investment philosophies, etc. But we've discussed a lot of individual names. From an investment standpoint, I wanted to know, how is it that you approach it? Yes, small in size, medium in experience, the SMILE philosophy that you speak about. How important for you is meeting the management of a company that you invest in? How do you do that? How do you go about it? Secondly, how do you screen sectors? Because, sector allocation is majority, or, if not more, at least half of the most important part of investing. So is it top down? Is it bottom up? How do you approach investing like that?
So Mangalam, first let me answer your first question, that meeting management is important or not. If you really ask me, meeting management is not at all important. I remember, I will give you one instance just for an example, just for the viewers. I never met Sera Management till the price was 700 rupees. Okay, so one day a friend of mine told me that he knows the CFO and all, or the management, whatever, he knows the management and all, and you should meet him. I said I don't want to meet, because I never bought any shares after meeting the management. Whatever stocks I have bought, always I buy, before, because that is, I don't. So anyway, now coming to my point, at 700 rupees, so there was some conference, that company had organized some conference, in Mumbai, and I went to meet them. And I realized that maybe that stock should not do well, or maybe there would be some problem in the company and all. This is what I could understand from the meeting and all. Eventually, actually, I did not sell any shares, and you see what happened to the price. So I think management himself doesn't know. So far, small cap and mid caps are concerned, I think management himself doesn't know that what is going to happen in the economy, and what is happening. Since they don't know anything about the economy, how would they know about what is happening? They may know something like what expansion they have, what are their future plans and all. But the internal factors must be in their control. But external factor, it is not in the control of the management also. So I think it's a futile exercise. You should, if you are a long-term investor, if your vision is very short, like suppose if you want to buy a shares for 1 year or 2 years, then maybe you need to meet the management. So for me, it is not important. And second question was that I always am looking out for the change in the sector. What is happening, as I said earlier described. So that is you can call it a bottom-up approach. But first I should like the sector. Then I should find the smallest company in the sector. Like usually all these companies having only 4 or 5 companies in every sector. So I should find the company which is smaller in size, and then if I like the company, if I like the management is the first criteria. If I like the management, then I will buy in a big way. Big way in the sense, whatever money I have at that point of time, I will buy the shares.
All right, that explains the philosophy of entry. Now, the second follow-up is exit. You said that, you're always 100% invested. So, but at the same time, one should also keep booking profits. So, how does Vijay Kedia sell shares? I mean, how does he think of looking at exiting opportunities?
No, when I find that, as I said, though, stay invested in a sunrise industry at any cost and stay out of a sunset industry at any cost. When I see or when I realize that maybe the sun is setting in the sector, that is the time that I would exit the stock. Or if I find some management is doing something fishy or something which they should not do, then also if their focus changes, then also I would sell the shares. Or the shares become so expensive that it is irresistible, then also I could sell. Or I find some another story that stock has already gone up 10 times, 20 times, or whatever it is. Times are not the criteria. But if I find some better story than this existing stock, then also I may exit.
That's a very, very interesting philosophy, Mr. Kedia, that typically when we think of micro caps, small caps, everybody says bottom up, bottom up. But it's a very interesting approach that you first identify the bigger macro theme, the big sector, and then within that you look for the smaller names that you can back on. So to go back to the quote that you've been making, that stay invested in sunrise sectors at any cost. What are the new sunrise sectors you see? There's a lot of chatter on EV. Look at a stock like Electra Green Tech. The moment anybody says renewable, EV, stocks start hitting the roof. Do you like that? Do you like anything else? What else is interesting you now?
No, it's a large sector, not only EV in the sense what EV two-wheeler, EV three-wheeler, EV four-wheeler, retrofit, then battery, then BMS. There's whole gamut.
Solar cell,
solar cell.
So much,
there's so many things. So it depends on what you like. So as I have invested in Atul Auto, they are also into electric three-wheeler. Although company is not doing well now, that's because you see the numbers of whatever June, March, May numbers were not good. So that one should remember always that there is always, there are many, as they say, slips between the cups and the lips. So that is there. But I have invested in electric.
So you like electric mobility as a theme?
Yes, electric mobility.
Okay. Anything else? Sunrise themes?
Like aviation, I like.
Okay.
And
Interglobe.
Interglobe, I've invested. It's in people know I have talked about it, that I like Indigo. Again, it's not a recommendation. You should do your homework. But a simple matter, you're in Bombay, if you ride a auto rickshaw, it costs you 23 kilometers, 23 rupees per kilometer. If I have to go to Bombay, from Bombay to Delhi, say it is 2,000 kilometers, it will cost me 4,000 rupees if I book my ticket 30 days in advance. That means 2 rupees kilometer. In 14 days, if I have to book within 14 days, then it may cost me 8,000 rupees. Okay. Then again, it's 4 rupees kilometer. So Indian, this airfare are the cheapest in the world. I do not mean that they should increase the fare and all. And it does not come into any regulation also. Government cannot control. If government would like to control the aviation sector, then we have to go by walking.
But I think the minister just recently said that there is no plan, right, to cap airfares.
They cannot, but it is not under regulation.
Yeah. Now that you put it that way, now that Mr. Kedia describes it that way, that even at 8,000 rupees, it's 4 rupees a kilometer, and your auto rickshaw charges you 23 rupees a kilometer. That's new perspective. Now I won't feel that bad when I'm booking my next flight, maybe.
Mr. Kedia, you're famous for coming up with very simple sayings in a way which describe your thoughts about the market in a very creative way. You're a very creative person. So I don't know if you want to sing, but I just want to ask you, there was something you said, life is rude.
Yeah.
Right? If you, and it was please, why don't you tell us?
I will read out to you.
Why don't you read it out?
Yeah. Life is rude when you try to figure out the trend of inflation, recession and crude. Life is cool when you stay invested in this market like a fool. Life is fun when you are invested for the long run. Life is a blessing when you don't compare investing with casinos and racing. Life favors when you don't entirely depend on economists, chartists and neighbors. Life slaps when you can't avoid the temptation of investing in Bhangar cap. Life honors when you invest with the mindset of co-owners. Life is a fight when you want to become a millionaire overnight.
Wonderful.
Wonderful, wonderful. That's well said.
A lot of wisdom, right?
Absolutely.
In a very entertaining way. So I think with that, we'll say thank you. Thank you so much for dropping by, making the trip across Bombay. So wonderful.
23 rupees per kilometer.
Still cheaper than taking a flight, so not bad.
Thank you so much, Mr. Kedia.
Thank you.
All right. Well, we'll take a quick commercial break. That's the conversation with Vijay Kedia. The market is recovering. I mean, we're down just, 45, 50 points or so at 18,778. We'll take a break and we'll be back with Rajesh Kothari Okay, I think, Surabhi, we have Rajesh with us.
Actually, we do have Rajesh joining in now, so let's carry that conversation forward. Rajesh Kothari, Managing Director at AlfAccurate Advisors. Rajesh, good afternoon. Good to have you in the conversation. So, we were having a larger perspective conversation with Mr. Vijay Kedia. I want to dial back to a little more of the here and now and this predicament that the market seems to be in. Today we were just 6.7 points shy of this all-time high level, and then selling has set in. But I want to talk to you about the financial space in a little more detail, Rajesh, because for whatever reason, there has been consistent selling in banks. They are underperforming the Nifty as well. Do you think this is just some tactical move, some shifts playing out? Or is this perhaps something bigger that's building up, maybe something to do with margins and the outlook going forward? Your sense on financials?
So, thanks for having me. I think when you look at the overall financials, it is to be broadly classified into two categories, banks and NBFCs. Now, what has happened is that in last entire year, the banking sector, I'm talking about the bank side of the banking sector, they benefited the most because the interest rates were going up. And when interest rates are now likely to be kind of picked out, or it may take a long pause and then again it may start cooling down, definitely the net interest margins, which went up significantly, definitely it will cool down to some extent. Of course, it varies from a bank to a bank. But very importantly, the non-food credit growth, that still remains very, very strong. But the net interest margins of the banking, pure banks I'm talking about, that may come under little bit of pressure. However, the NBFC side of it, which were adversely impacted last year, they will now benefit going forward over next 12 to 18 months as the interest rates are now picked out. And for them, the margins actually will expand for NBFC sector. So I think there might be, some switch on incremental basis, one might be doing it. But overall, as a theme, we still are overall positive on banking and finance on both banks as well as an NBFC. Of course, one needs to be selective in buying the stocks.
All right, you've spoken about banks and NBFCs. What about the insurance space? I mean, BFSI as a whole, because over the last two trading sessions, life insurance in particular has got a strong tailwind behind it. In fact, just look at the intraday chart of HDFC Life, a big surge from lows, currently at the high point of trade. Giving it company again at the highs of trade is SBI Life and ICICI Pru Life. All these life insurance stocks have been doing well. Your thoughts on the insurance space?
Well, currently we do not own any insurance directly. We own it through, of course, the banks who hold these insurance companies. But I think, what is important is that if you have a 2-3 years view, then banking sector in general provides enough opportunity, enough growth compared to playing, I think, the micro segments, where then again you take the risk from the government side in terms of any change in regulations, be it the taxation or something else. So I think it is always better to play directly through the banks rather than through the sub-segments like insurance. At least that's what we do at our portfolio.
Okay, big move once again in HDFC Life. Look at it now, 5.5% on Friday, and it's the top winner on the Nifty now. What a turnaround after the blowback that we had at the end of budget 2023. This has just been absolutely spectacular. Rajesh, what's the house call on technology now?
Well, this is a space where we went underweight exactly about 15 months back in March 2022, where we reduced the most of the weightage on IT sector, and from there, of course, by and large, that theme went right, that trend went right. From here on, we are incrementally monitoring the space. Stock prices have corrected, which is a good thing. But the valuations are still not that attractive because the growth is also impacted significantly because of the US slowdown. So, I think some cherry picking, that's what you started in this sector, but very, very selectively rather than taking the broader view on the sector. So as a sector, we are still underweight, but we have started doing some cherry picking within the IT space.
Well, Rajesh, everyone speaks about the old economy, the manufacturing space and all of that likely to do well in India because of PLIs. Your thoughts on what are the interesting pockets out there? And I ask this specifically because the electronic manufacturing sector has done extremely well, and EQ Lighting, a stock that listed just last Friday, has rallied. I mean, after a 50% move on day one, is up another 10% today. So your thoughts on manufacturing and electronic manufacturing?
Well, I think if you remember, probably we are one of the first one who said that we are very bullish on capital goods as a theme 2 years back, driven by various factors, and PLI, the Make in India, the government efforts was also part of the reasons why we became very bullish on capex as a theme. So we continue to remain positive on capex. In fact, we hold almost 26-27% of our AAA budding beast in capital goods, and we also own about 12, 13, 14% of our flagship plan AAA India Opportunity PMS for the capital goods. So we are reasonably bullish on this space, and of course we are equally bullish on this EMS space. I think the opportunity is huge. These companies are actually too small. Whichever companies we talk about, we own a couple of names in this space in our AAA budding beast. But I think the opportunity is big, and there are no sizable companies in this. So I think many companies will come out of the IPO over the next probably 12, 18 months. They all are like 100, 200, 300 crores kind of a profit-making companies. But I think they have a long runway ahead to become 3, 4, 5 times in terms of the profit size, over the next 3, 4, 5 years. Provided, very importantly, I just wanted to highlight you, is that please always make sure that, from viewers' perspective, that when you pick the stock, the working capital cycle is very, very important. So there are many companies in this space which are showing high margins, but their working capital cycles are not so efficient. And compared to that, we prefer the businesses which might be a little bit less margins, but their ROCE, return on capital employed, is very strong, and their cash flow cycle, the cash conversion cycle, is highly efficient. So we always prefer those businesses compared to the other side of it. You might see growth in both, in terms of revenue growth and profit growth, but in one basket, you may not see the efficient cash flows, and therefore, over a period of time, it may not create the huge wealth in the longer term.
Sure. Thank you so much for joining in and giving us your views on a bunch of sectors and advice on what one should do. Let's move on and talk about what's happening in the dealing rooms, because the market has seen a bit of a knock from the highs. Nimesh joins us. Nimesh, what are the dealers saying to you about the move today?
Well, it looks like a marginal profit booking as we inch towards a new all-time high. There is a bit of profit booking.
All right, I think we'll just have to repatch your mic out there. But, there is mild profit booking that Nimesh has been speaking about. Let's take a look at a couple of places where there is profit booking. Financials definitely top that list. We have IDFC First Bank, which has moved to the low point of trade. And at the same time, we have some declines that we're seeing in a couple of these sugar names as well. So something like Balrampur Chini is at the low point. We are seeing some bit of a decline in names like Bharat Forge. DLF2 is come in for some bit of profit taking. So DLF is at the low point too. But Nimesh, we fixed you. Everyone wants to listen to you.
So, it looks like marginal profit booking day. Mangalam towards an all-time high. We've seen some bit of profit booking in today's trade. I think the fall today is largely led by the financials, and within financials is the large private banks which are dragging the markets down, and some select large caps as well. But the Nifty bank is down close to 1%. Compared to the private banks, there is buying interest in the PSU bank stocks. I believe there is a basket buying at a leading FI desk in the PSU bank stocks. That's the reason why the PSU bank index is relatively outperforming the Nifty bank index. In terms of flows, while what we saw, unlike all of last week, when there was aggressive buying by the FIs all through in the cash market, today it looks like it's a mixed day of trade in terms of flows. There are equal number of buys and equal number of sells as well. So maybe you'll not see a very large buy or a sell figure from the larger FIs. The other sector which deserves a mention is the NBFCs. Right. We saw a lot of sell-side analysts writing positive commentary for NBFCs, and that is one space which has done well, largely on back of those reports, as well as some buying interest as well. So net a day of consolidation with a bit of negative bias, but some signs of profit booking as well. Not only from the larger institutions, but from the retail investors as well. And
understandable as well, especially the kind of run-up that we've seen. Individual stocks, what do you have on your list today?
So in terms of individual names, the first stock on my list today is HDFC AMC. For a very long time now, there is this anticipation of a large block deal coming soon. Looks like that's likely to come very soon. So that's the reason why a marginal pressure as well in that stock. But it's a large block, so we need to check as to how the demand is going to be. But that's the reason why HDFC AMC is under pressure today. The second stock is FSN Ecom, which is Nykaa. For the second day running, that stock is buzzing in trade. Friday, the stock was up 7%. Today, it's up 4% on very large volumes as well. And I believe there is genuine interest back in this particular stock after the investor meet. So some bit of the delivery volumes are going to be quite high in Nykaa today. The third stock is Tega Industries. Not a small stock, 6,000 crore market cap company. There is a large block, 4% equity has changed hands. I believe the promoted entity was a seller in today's block. It's largely been done to bring the holding to the minimum public float of 75%. So the buyers would be interesting to know as to who's bought. I was looking at the shareholding pattern. Mutual fund owns close to 11%. So this block would be interesting to track. And the last track is HDFC Bank. After a long time, some bit of interest seems to be back. It's been in a very tight range for the last many months now. But now it looks like a selling pressure from a leading FII seems to be largely getting over. Remember, for the first time in many months, the ADR is now close to 13% premium. We've not seen it for a very long time. So it looks like some bit of interest is back in HDFC AMC as well from larger FIs.
All right, Nimesh, thanks a lot for that. So those are a bunch of stocks that you spoke about. But just before we go into a short break, just pull up the IT index. The IT index has actually come in as a wee bit of support for the market, which is seeing some bit of profit taking. So the IT index is at the high point of trade, led of course higher by its two largest components. We have TCS, which has moved higher, and at the same time Infosys too seen a bit of a spike, not too much in absolute terms, but from lows, and in terms of the relative performance of the market, we are seeing some support coming in from IT. Take a short break, come back, and also always we'll get you buy today, sell tomorrow calls from our technical experts.
Welcome back. So some pullback from the lows of the day. That's largely thanks to the buying that we've got on the tech side of the market, though banks are still sulking. Though the bank nifty is also cooled off a little bit from the lows. It's kind of just trying to recover a small bit. That's the IT index doing actually quite okay right now. Mitesh Thakkar is with us again. Mitesh, afternoon. So what's the advice? Final few minutes of trade now?
Afternoon, Surmi. I think, couple of factors which are important. One, the bank nifty, while it's again managed to bounce back from levels close to 43,500, I think the structure continues to weaken gradually, and therefore I think in the coming few days we'll break this range of 43,500 to about 43,350. Once that happens, then I think we can look at a 600-700 point kind of correction in the bank nifty. The VIX is something which has caught my eye as well. I think it's done good base building around this 10.5-11 zone. It's trying to reverse. So if the India VIX, I think, reverses and starts getting past 12, I think that could, spike up some kind of correction and suggest that the market should give a pullback. But broadly, I think till that happens, the market will be slightly, sluggish and therefore not declining immediately. I have one buy and one sell right now. Lalpath Lab is something, which I like. That's a buy with a stop below 2095 and a target of 2175 can be looked at. And IGL is on the negative side. So we recommend here selling with a stop at 466 for targets of 445.
All right, got that. Thanks, Mitesh, for the outlook and the picks there. Let's focus on some more stocks in a bit. We'll also be chatting with Mehrabun Irani. Ahead of that chat, let's look at Nykaa. Stock's up about 4%, and this stock has had a pretty good month. It's up about, Mangalam, I think 18-19%. What's changing?
Well, for Nykaa, for new age companies in general, what's changing is that these guys are focusing on profitability over growth as against growth over profitability in the earlier part of the cycle, and which is why we saw a big decline as well. Now that these guys are getting that act together, perhaps the street is looking at all these new age companies. So it's not just Nykaa. This month has been a good one for names like Delivery and Zomato as well. But Nykaa specifically had a good day on Friday. They had their annual analyst day. In that, the company spoke about increasing their total addressable market to about $180 billion by 2027 as well. So the stock was higher, and now we have some brokerage notes as well. So there's follow-on buying coming. We have a note coming in from Jefferies. They have a buy rating target price of 200 rupees. They say that the management sounded positive on its industry outlook and the strong right to win that Nykaa has across the categories that it operates in. Importantly, the outlook on profitability is also led by better customer retention, own labels. Even in fashion, positive contribution is a must for Nykaa, unlike other peers. And at the same time, premiumization trend is something that Nykaa stands to benefit the most from. Nomura, on the other hand, has a buy as well with a target price of 183. They say that the current, at current valuations and the growth projections that the company has made, it trades at 5.1 times FY25 EV to sales, which is not bad. It's attractive given the strong growth outlook that the company has. Especially, fashion and personal care is likely to grow anywhere between 27 to 29% over the next 3 years. And finally, we have an obvious view coming in from Macquarie. They have an underperform rating on the stock with a target price of 115. The reason why they're still cautious is because they say that the company did not give any medium to long-term sort of revenue or profitability guidance. And at the same time, there is a concern of capital-intensive growth giving rising competition. So they would like to stay on the sidelines.
Okay, Mangalam, got that. So Macquarie is still circumspect, but others like Jefferies and Nomura getting more positive on Nykaa. Well, let's ask Mehrabun Irani what he thinks. Mehrabun, always great to have you on the show. Thank you for joining in, and good afternoon to you. I'm not sure if you've already taken exposure to some of these new age stocks like Zomato, Nykaa, but do give us a view if you have one.
Well, I've been negative from day one. I think from the time the IPO was launched of most of these names, including the Deliveries of the world, the Zomatos of the world, the Nykaas of the world, I felt that why nobody was questioning as to how the stocks were valued at this level. And even today, not many are able to answer. Yes, if you have a conviction, this could turn out to be good stories. But honestly, I think while there could be trading opportunities, because most of the stocks have shed weight from the higher levels, and there could be trading opportunities, my personal conviction even now, if I look at the market cap of these companies and if I look at the bottom line and even the top line, I think the disparity which it is, I don't think I have that kind of money or I have that kind of guts to possibly ask anybody to put in money in this stocks. While there could be trading opportunities, I'm not disputing that.
All right. One sector which is seeing a fair amount of profit taking right now is the FMCG sector. So look at the intraday chart of Marico. It's down at the low point of trade. You have Nestle, which wasn't doing well all through today's trading session and now also has moved to the low point of trade. Maybe some bit of profit taking, maybe some worries about the monsoon demand in the second half of this year. Mehrabun, the FMCG stock, the FMCG index has been the second best index in this year, this calendar year so far. What are your thoughts on the space? Any stock that you like here?
I think you mentioned it right. I think 2 weeks ago also when I was on your channel, I had mentioned the same thing, that if you ask me from the Indian markets point of view, Indian markets, I think if you keep away the global uncertainties which you have been discussing for the last over 1 year, whether it is geopolitical, whether it's inflation, whether it is bond yields, those type of things, I think I have been mentioning that two specific problems that the Indian markets can have over the next 6 to 9 months. Number one is the monsoon. And allow me to say, despite spending nearly 25 years in the stock market now, I think this is the year where I am a little bit more concerned as far as the monsoon goes. I think virtually every second day you're having a report that the El Nino will have its impact. There could be drought in some parts of the country, whereas the IMD is having a slightly different view, and let's hope IMD is right. But at the end of it all, if we don't have a good monsoon, we could have some points get shaved off the GDP. It could possibly affect the corporate profit of many of the companies and many sectors, I would say. And ultimately, don't forget, it could possibly give a big blow to inflation also, which is slightly getting tamed over the last 1.5, 2 months. So all these things will go out of the window, and with elections around the corner, people will start extrapolating and stating that any rise in inflation because of poor monsoon is certainly not good for the ruling party. So I see a lot of things happening. God forbid if we have a bad monsoon. I'm keeping my fingers crossed, but then you can't possibly undermine it in any way. And the second point is the noise as far as elections go as we go into November, December. Barring these two factors, allow me to state, I think the markets look fairly well poised, even despite the fact that the broader markets have done very well. Indices have not, the frontline indices have not touched a new high, but most of the portfolios that I know of, I think most people are happy that their portfolios are at an all-time high, even though the Nifty and the sensex are not at an all-time high. And there is some sort of complacency now which is coming in. People who are virtually shy of buying stocks just 2.5 months ago virtually are asking every passing day, kuch khareedne layak hai kya? So there is some complacency which is coming in, which is a little worrying. The problem on the monsoon front is something which needs to be watched over the next 15, 20, 30 days how it progresses, and it's God forbid its impact on inflation. So there are some factors here and there which creates a little bit of flutter, a little bit of worry. Otherwise, honestly, I think we are at a stage where the markets look fairly valued right now. I would state that continue to buy in the market if you want to, but now it's the time to be very choosy, very selective what you are buying for. And if you are at 18,500 and looking at a 20,000 also, and possibly a 10% downside, I don't think there are too many frontline stocks which are going to give you comfort in the present valuations, and FMCG is certainly one of them. So not too much in a hurry to recommend FMCG right now. I think they have had a decent run in the last 1.5 months because the cost of production was coming down, because most of the commodity stocks had come off. So the margins were expected to improve. Even if the consumption doesn't keep pace, profit margins will increase. That is the way the market was looking at it. Stocks went up, and now that they've gone up, I think people should be a little bit more watchful.
All right. Fair advice, Merabun. Stay on. We want to discuss some more stocks and sectors with you, but we also have to take a very quick break. So we will do that. And as we take the break, let's leave you with some opinion that we got from Prashant Khemka, founder at White Oak Capital Management, as well as Nilesh Shah of Kotak AMC. We're speaking to them earlier about the markets being virtually at all-time highs and the approach that investors should take from here on.
About China, I think the leadership there for geopolitical priorities has what that has meant is the economic policies have taken a back seat, and that is playing to India's advantage when India is on the front foot in terms of its economic policies. We are end of the global rate cycle, and without a massive fall off in economic activity in the world's largest economy that was anticipated, and this largest EM market, as you pointed out, competitively falling behind India, I would say in economic terms, has meant a big boost to economic activity within India. Portfolios, obviously, we are fully invested as always, with largest exposure in sectors like financials and consumption. I think we always have to be watchful, but this time it doesn't seem like it is out of place compared to where the rest of the market is. Remember, prior 12 months, if you see, so as you rightly pointed out, this uplift in mid and small and micro caps is largely 2-3 months old. If you look at last year, 22, these segments had underperformed large caps. Not by a huge lot, but they had underperformed nonetheless. So there's been some time correction in this area.
It's a fairly priced market, neutral market, and one will have to be careful in picking up stocks at this point of time. The euphoria about India today is now with the FPIs. They were on exodus mood between October 21 to June 22, selling about $35 billion. And now they are buying back the same stocks at a higher prices. The local investors have been buying equity on a regular basis. By and large, they have been coming via mutual funds, right, rather than going directly into the market. By and large, they are focused on quality. So overall, retail investors have matured a lot. This is not to say that everything is hunky-dory in India. Even today, 89% of retail investors who are going to trading in FNO end up on the losing side. Do your SIP in mutual fund and participate in India growth story.
Welcome back. The Nifty is holding at around that 18,750 mark, even as the Nifty Bank is now down about 300 points. We have a bunch of stocks which are doing well. MRPL from the broader markets has moved to the high point of trade, up 9% Nykaa continues its march forward, so Nykaa's moved to the high point of trade as well, and EQ Lighting continues to do well too. Two stocks that really stood out in today's trading session, Mehrbun. One of them was EQ Lighting. We haven't spoken about it post-listing. So your thoughts, 50% higher from its offer price now. And secondly is 5-Star Finance. There was an interesting initiating coverage that came on that counter as well. So on 5-Star Finance and EQ Lighting, if you like them.
Both these names are interesting. I've looked at it on the surface, honestly, but from the valuation angle and looking at the way the stocks have been greeted by the market, I think it's not very fair to comment at the present level, because the valuations in both these cases are something which I have not been able to comprehend at the moment. But they're certainly good names.
All right, Mehrbun, hi. Just about 5 minutes to go for close. And by the way, Mehrbun was on a break. He's back just for us. So thank you, Mehrbun, for that. You bought into a bunch of Kirloskar Kirloskar companies, right? And that is a segment, that is a group of stocks which has done very well for you. Talk to us about, within that group, which is the one which you like the most, and what's the recommendation?
Well, the clear disclosure, have been invested in this group for the last 2.5, 3 years, and all the stocks, or most of the stocks in this group, starting with Kirloskar Pneumatics, second is Kirloskar Oil Engines, third is Kirloskar Brothers, and fourth is Kirloskar Industries, which is more of a holding type of company. I think all the stocks have gone up by nearly 150-200% over the last 2.5 years. At the present level, I feel that somewhere the market is now discovering that the stories behind these companies, especially Pneumatic and Kirloskar Oil Engines, are super stories. The point is, can one put in incremental money from a longer term angle? The answer is certainly yes. Have these stocks gone up a little bit too sharp? I would not say they've gone up too sharp, but I would say at the present level, they look fairly valued at the moment. So I think, Prashant, this is the time in the market where when you try to look at the market and say that the broader markets have done better than the frontline indices. And if I'm giving only 7 to 10% upside for the frontline indices and maybe a 10% fall in the markets for whatever reason, including the monsoon factor, which I was mentioning earlier to Surabhi, I think I would say that well, it's better to be selective and buy into some mid caps and small caps also, because there the potential of the stocks appreciating seems much higher than the frontline indices. And this misnomer or this disparity between the frontline indices as well as the broader markets. Why the broader markets are done better? Because the frontline indices, if you look at the IT majors, if you look at even Reliance Industries, I think these stocks, and even now the HDFC twins, even ICICI Bank, they have stopped moving up further. So while the broader markets are doing well, are looking relatively stronger, I think the frontline indices at the moment seem to be running out of steam. So if there is a 7 to 8% appreciation, there are people talking of even a 20,000 coming in the markets. If you have a decent monsoon, even I am saying it can come. But should I go and put in incremental money in most of the frontline stocks which are well discovered, well researched and possibly widely owned? So I would certainly look out for opportunities elsewhere. Kirloskar was a group whose stocks I felt were under-owned. Nobody was talking about it, not well researched. Now people are talking about it. To put in incremental money from a longer term angle, the stories are good, but there are pockets elsewhere to possibly try and look into and take advantage of the momentum which we are seeing in the broader markets at the moment.
Okay, so stick with some interesting broader market themes. Large caps may continue to struggle. That's the view. We will keep that in mind. Mehrabun, thank you very much for joining in. You have a good afternoon and we look forward to our next conversation. Well, with that, we're coming down to the final few minutes of trade, and let's recap what for the bulls would be a disappointing day, because we came within kissing distance of the all-time high, barely 6 points off it, and then it was a near one-way slide on the way down. I say near one-way because there was some attempt at a recovery, which is why the Nifty looks like it'll probably go home at around the 18,750 handle. That's still a 74-point cut. The culprits, well, absolutely the bank index. The Nifty Bank is ending with a cut of about 0.7%. Kotak, Axis, ICICI Bank, IndusInd Bank. You've got cuts between 1% to 2% on most of these names. The one bank that actually bucked the trend was HDFC Bank. HDFC Bank, HDFC, and actually even HDFC Life. This trio from the HDFC stable, they maintained their stance on the green side of the screen. HDFC Life particularly impressive today with the further gains coming in. But again, if I talk about the losing side, Reliance added some more pressure on the way down. There were stocks like Lever that didn't quite add up. Some profit taking on a Hero Moto, on Eicher Motors when we're talking about the automotive space, even Bajaj Auto. So two-wheelers coming under pressure. IT has been trying to fight back. Interesting show of strength in the last 1 hour from IT. TCS and a couple of other names, Tech Mahindra, etc. on the upside. But it really wasn't enough for the bulls. So as we see things, the Nifty finally going home with a 70-point cut. On the mid-cap side of the market, not sure if Mangalam is with us. The mid-cap index managed a very little, just a 20-point gain. But beyond the index level, if you look at individual counters, and of course, today's theme was very, very clearly defense. Big moves coming in. Whether you're looking at a Paras Defense, which was up about 7%, Cochin Shipyard, Mazgaon Dock, Astra Micro. These were the names where we found plenty of buyers. Nykaa was the other stock that stood out. MRPL. These were some of the names on the upside of the screen. A decent show by some of the PSU banks today, by the way. Central Bank of India, Bank of Baroda. These were stocks on the upside. But otherwise, for the large cap screen, it was a day of disappointment. No taking away from that. Well, the bell has gone off, and we are looking at a final count on the Nifty, a 70-point cut. The Bank Nifty lower by about 300 points. The mid-cap index absolutely flat. With that, we come to the end of this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere because lots more is coming up. A very special conversation ahead of Prime Minister Modi's US visit coming up on the other side on our special offering, PM Modi in America.